Hey folks, welcome to Economic Observations. My name is Chris. Today is the 26th of January, and thank you so much for watching. This video is sponsored by the Tanzania School Foundation, a nonprofit near and dear to my heart. Well, another wild ride on Wall Street today. When the market goes red, it goes green, and when the market is green, it turns red. There is no sense to this market at all, and no one can predict what's going to happen tomorrow. We just don't know. We all heard from Jerome Powell today, and he wants to squish inflation. Yep, that's what the word was, but when he came out today, well, he was a little wishy-washy. I don't think we can really blame the Fed for what has been happening. I believe that it is fear of something going on that is changing the markets, but the Fed is still issuing $30 billion a month in these assets, and they are going to continue doing it through February and in March. They meet again in March, and hopefully by then they will discuss raising interest rates. One of the reporters asked, can it go higher than 0.25%? And Jerome Powell said, well, we will have to see what happens when we get there. Right now, employment is good and inflation is high, and those are their two main objectives. The stock market is not in their realm of even focus right now. They want to make sure that the labor market is strong, and they want to curb inflation. So how are they going to do that? They don't really know. That's what I took out of Jerome Powell's meeting. He understands that there are huge ramifications, and he wants to do it without disrupting the stock market. But how can you take out all that liquidity all at once without disturbing the stock markets? I have no idea. He also understands that if he raises interest rates, the rest of the world will suffer, especially emerging countries or emerging markets. You have all these developing countries that have US dollar denominated debt, and if interest rates rise and they want to refinance, they're going to need more of their local currency to convert to dollars to pay off that debt, and it can be a huge problem for the rest of the world. I care about the rest of the world. We have some kind of obligation. We are the world reserve currency. I think Jerome Powell and the rest of the Fed people, they know that. And the IMF chief had already contacted them and advised them that there can be catastrophic effects if the US dollar raises rates. So I think that that is on the back of their mind. I know they have this other more pressing inflation in their own country, but inflation is skyrocketing all over the world, let's face it. There are supply chain issues everywhere. It's not just here. So it might be a problem. It will be a problem, not only here, but for everyone. And here we have tools in our toolbox, so they say, that we can manage inflation. The Fed can, in fact, raise interest rates, but they can't fix the supply problem. I said this in an earlier video. So if the supply problem is not rectified until 2023, we can even see higher inflation with higher interest rates, and that can be catastrophic. Also, if they raise interest rates too much and all this liquidity evaporates and the growth of some of these companies shrinks, well, they're going to lay off staff. And when they lay off staff, the employment market might not be good anymore. And this is all the things that they are balancing. And I tell you folks, they are walking on a tightrope, razor thin. And they know that if it's a hair out of square, or one thing is moved too early or too late, the whole thing can blow. And this is on the burden of them. We've never been in times like this before. We've never had a situation like we're in, especially with the supply chain. And that is where they can't just fix it, because it's more than just in their realm. I don't know what they're going to do. They say that they're going to raise interest rates in March, whether it's 0.25% or 0.5%, and how markets handle it. I think for now, through March, I think the stock market's going to continue going red to green and green to red and up and down, and it's going to be a little uncertain, but it'll be more certain than it was in the previous weeks, because everybody was anticipating a very hawkish Fed, and I don't think they came out too hawkish. I think they came out very concerned. right? And while the market is not in their realm, they are concerned that they don't want to disrupt it. But how can you issue $5 trillion worth of liquidity and expect it not to inflate? And I'm sorry, but the markets are going to be affected, and I don't know if they're going to do anything about it. Anyway, another wild day today. Right now, as I film this video, the Dow futures are down 257, S&P is down 33, and NASDAQ futures are down 125. So who knows where it can be. By the time you're watching this, we can be up again. Hold on tight, folks. Wild ride ahead. I don't know if the Fed can do what they're mandated to do. I wish them luck. It's not going to be easy. And if it is that hair out of square, it'll be ugly. I tell you that. Anyway, for my longtime subscribers, remember in October, I talked about Melissa. Melissa was a homeless girl I met in Boston. I started talking to her. I met her on a couple of occasions. She was from Reno, Nevada. I sent her home yesterday. I got a letter from her. She is in a 13-month program to rehabilitate her life. She sent me a letter, and the closing letter was, "Thanks for everything, and thank you for saving my life." Anyway, you have to find joy where you can get it, folks. So be kind. Call someone, tell them you love them. I will talk to you again real soon. Thank you so much for watching. I appreciate you. Smash the like button and hit subscribe, and we'll talk again real soon. Have a great night.